Are you ready to become your own boss and turn your passion into a thriving business? Welcome to Business Mind. In today's video, we will explore if interest rate hikes are finally a thing of the past. Before we start, if you're new to our channel, please don't forget to subscribe and hit the notification bell below to notify you on our next Business Mind updates. Interest rate hikes. Interest hikes. It's been a wild ride as the Federal Reserve delivered its 10th consecutive rate hike from March 2022 to May 2023, rocketing the federal funds rate to a target range between 5% and 5.25%, the highest it's been since 2007. But hold on to your seats, because we've got something intriguing to talk about today. We've got reasons to believe this relentless streak is finally coming to an end. In the next few minutes, we're going to break down the factors and signals that suggest the era of interest rate hikes might be nearing its conclusion. So, stick with us as we unravel the mystery behind this critical financial development. Cooling labor market. In recent reports from the Bureau of Labor Statistics, a concerning sign has emerged: a cooling labor market. In October, non-farm payrolls increased by only 150,000, falling short of expectations. And this came after a downward revision of the previous month's figure to 297,000. The unemployment rate also saw a climb, reaching 3.9%, and there was a noticeable slowdown in monthly wage growth. These trends are raising questions about the overall health of the economy and have led some to speculate whether interest rate hikes might be on hold. Join us as we explore further signs and their implications in the ever-evolving world of finance. Fed's interest rate policy. The cooling job market is not just a standalone concern. It also has significant implications for the Federal Reserve's interest rate policy. With the October employment data revealing signs of a weakening labor market, there's growing speculation that the Federal Reserve may decide to keep interest rates on hold in December. This development reinforces the view that the Fed is potentially done with its most aggressive interest rate hiking campaign in 4 decades. The central bank's response to these economic signals will be pivotal, and it leaves us with a critical question: are we witnessing the end of an era of aggressive rate hikes? Stick with us as we delve deeper into this financial puzzle. Economists' views. Economists play a crucial role in decoding the financial landscape, and their views on the matter are indeed enlightening. Prominent economists like Jay Bryson, the chief economist of Wells Fargo and Petco, have weighed in on the situation. Bryson's sentiment is clear. He believes that the Federal Reserve is unlikely to raise interest rates further. In his words, "Put a fork in it, they are done." This perspective is seen as positive news for the Fed and investors alike, as it suggests a potential pause in the series of interest rate hikes. But is this really the case? Let's continue our exploration to uncover the broader implications of these economic indicators. But wait, are you here for financial success? The path to it is full of challenges, but don't worry. Business Mind is here to help you dream big and achieve bigger. Check the links below, and who knows? Your success might just be one click away. Federal Reserve's call. Speaking of the Federal Reserve, their recent decisions are pivotal in determining the future of interest rates. In a noteworthy move, the Federal Open Market Committee, or FOMC, voted to keep interest rates at a 22-year high for a second consecutive meeting. This decision sent a clear signal that they are proceeding carefully, indicating a reluctance to raise rates in the near term. Fed Chair Jerome Powell's statements have further reinforced this stance. It appears that the Fed is treading cautiously, which could have significant implications for the financial markets and the broader economy. Inflation as a factor. Inflation, the invisible force shaping the Federal Reserve's actions. Thomas Barkan, the president of the Federal Reserve Bank of Richmond, has given us a critical insight into the decision-making process. He emphasizes that his choice to raise rates again will depend largely on the course of inflation, placing great importance on the upcoming inflation reports. This singular factor has become the linchpin in the Fed's policy, and it's raising questions about what these inflation reports might reveal. The financial world is watching closely, and the implications of these choices are far-reaching. Market expectations. As we delve deeper into the current economic landscape, it's crucial to consider market expectations. Fed watchers and analysts are increasingly of the opinion that there will be no more interest rate hikes in the near future. In fact, many believe that the Fed's rate hiking cycle is likely over. This sentiment in the financial world is not to be taken lightly. It reflects a growing consensus that the era of tightening monetary policy might be coming to a close. But, as always, the financial world is full of surprises. So, is this really the end of interest rate hikes, or could there be more twists and turns on the horizon? Let us know in the comments below of your thoughts, and join us in this channel as we investigate further in the future and provide you with the latest insights. December Federal Open Market Committee meeting. This meeting is now looming on the horizon, and it's filled with uncertainty. As we approach the final stretch of the year, all eyes are on the upcoming December FOMC meeting. It's a pivotal moment in the financial world, especially considering the recent developments. While policymakers had initially penciled in one more rate hike for the year during the September meeting, Fed Chair Jerome Powell downplayed the significance of that projection. It appears that the Fed is navigating cautiously, given the economic uncertainties we've discussed. Now, all eyes are on the Fed's December meeting, where they will make critical decisions on interest rates. Will they maintain the current stance, or will there be a surprise twist in the plot? The financial world awaits with bated breath for the Fed's next move, as it will be life-changing for the rest of the world. The Business Mind verdict. As we wrap up this exploration into the intriguing world of interest rate hikes, it's clear that the financial landscape is filled with uncertainty and complexity. The signs of a cooling labor market, economists' views, the Federal Reserve's recent decisions, and market expectations all point to the possibility that the era of aggressive interest rate hikes may be coming to a close. However, the story is far from over. The upcoming December FOMC meeting is on the horizon, and it will be a defining moment that could shape the path of interest rates for the near future. As investors, analysts, and financial enthusiasts, we're all eagerly awaiting the Fed's next move. So, is this a sign that the interest hikes are at its end? Join the Business Mind community as we wait together for this suspense development. And there you have it. We've explored the interest rate hike's potential end. Remember, it all starts with a business mind, the kind that dares to dream big and strives to achieve even bigger. So check out the description below for the thing that could help you do just that. And if you're ready to turn dreams to achievements, don't hesitate to like, subscribe, and hit that notification bell right here on Business Mind. Stay connected for more insightful content that empowers you to take your business journey to new heights. So, go ahead, dream big, work hard, and watch as your efforts translate into success beyond your wildest expectations. This is Business Mind, reminding you that when you dream big, you truly can achieve bigger. Business Mind, signing off.